Hello guys, this is FX Mesh smashing it. What is going on, guys? Welcome back to my channel, uh, Price Action Forex Indices Analysis, where I study price action based on the strategy I adopted to be able to find opportunities in the market. And what I've started to do now is to try to record how I set up in the week and also show you live how I trade, so that you can see how I came about what I'm trying to explain in my videos, because many times I usually explain from a setup I've already drawn, so you don't really know how I came about those things. And my setup is it has so many lines and so many trend lines and psychological levels and everything, so it's quite confusing. So what I've tried to do is to record from the beginning of how I set up to when I taking trading opportunities, so you can get to know how many trades I won, how many trades I lost, and how the overall impact of the market. Like what I've seen so far this week, which is the week 27th June to 1st July 2022, is that the US dollar has not really shown any level of strength. It has had some kind of mixed reaction, so there's not been really movement so far. So how I set up is that I usually I wait the first day. I don't really trade the first day. I look at the market. The first day is to draw, to identify the high and the low of the week. And how do I do that? I have to first of all draw a horizontal line at the top. The first two candlesticks, draw a line on top and draw another line on top. The one on top is the high of the week, and the other line under is the below is the line is low of the week. It represents the high and the low of the week respectively. So that's how, and that's what I do in the first day. And also I allow the market to just play out, and secondly I identify the directional bias of the trade, or sorry, the market for the week. So how do you identify that? You have to first of all wait for a candlestick to break out of the two horizontal lines. So then after doing that, meanwhile all this is done on the 4 hours time frame. So then I begin to draw 10 trend lines from 4 hours time frame, which is my kind of my high time frame. Then also 1 day time frame as well. It all depends on how the market appears, because the time frames are kind of a goggle. So time frames, when people say time frame is like goggle. You want to see to what degree is the market trending. You want to understand the trend of the market, because understanding the trend of the market helps you to analyze properly, helps you to give a more a realistic approach to profit trading. You understand? So that's how it is. So we're going to go over to the chart to see how I set up. This is the second day of the week, 27th of June to 1st of July 2022. Catch you in the chart. Let's go. Hey guys, back to the chart. Now this is Euro USD. I'm going to be taking it as an example to explain my setup. So what I was saying was that on the 4 hours time frame, what I do is to first of all I will just take everything out. If I was to go back, let's see if it's gonna, yeah. So what we have is, first of all, let me just make everything clearer. Okay, so what you do first of all is to go to a 4 hours time frame. 4 hours time frame. This is the 4 hour time frame. I'll take this one out as if it wasn't there before. Then what you do is to identify the two candlesticks that starts the week. Now meanwhile the week started, this week is starting 27th. So on this 27th, the first day, I don't usually take trades. What I do is to draw my setup, and what I do is to identify the first two candlesticks of the 27th. So let's go there. 23, 24, 27th of the week. So what we do is to set up our sectional break. So you do that by going on like space like this on the chart, right click on your mouse, click setting, click appearance, then you see section break here on the drop down here. So section break, you click it. Okay, on the 4 hours, when you do that, you see that the section is broken, and all the distance between this and this is what? A day. This is a day, this is a day, this is a day, this is a day. Now from 27, start from 27. This is what happened yesterday. You see that the market on the 4 hours time frame pushed to the upside. There was the more weakness of the US dollars. Now, for those that don't understand how how do you know when the weak when the US dollar is weak, or when a currency is weak? Now you can see that this market is pushing to the upside from this point, this line. This is the day as it starts. 9 o'clock New Zealand time is when the market starts. So the first two candlesticks was what? This and this. This and this. This is the first one, 4 hours. The next 4 hours was this. So you draw two horizontal lines, one under and on top. The two candlesticks must be in between the two lines. The top is called your what? Your high of the week. Okay, high of the week. Then you have what? The another one, the low of the week. Yeah, on the 4 hours, remember. Then next, what you do is to look for the directional bias. The directional bias is on the week is what? Is buy. I'll explain why it's buy. Because this candlestick crosses the line of the high of the week. So, and you can see a clear break and another candlestick on top. So it means that the market might will be seeing more buys this week. Okay, yeah. So yeah, that's that. Then what we do now is to, on a 4 hours time frame, because 4 hours time frame for this particular analysis, this multi time frame analysis is our high time frame. We can zoom and say, okay, let's see if we can draw trend lines enough. What trend lines do we need? Okay, now I've already drawn a trend line here just to show the direction of the strength or the direction of the market. Now what we do next, after drawing our trend lines, we mark out psychological levels. Psychological levels are rounded up figures where buys and sales can take place as well, where buyers and sellers are willing to buy or willing to sell. Like for example, they are rounded off figures, like this one at 1.06000 is psychological level, 0.5900, you know, those are psychological levels. So we try to identify psychological levels, and psychological levels are levels that are, you know, we try to make 50 pips or 50 pips in between the two lines. So let's just take one and see, let's design them and see how we're able to so there's one here. You can see, okay, we just put this line here, and we open and see, okay, 0.500. so we try and coordinate it and see 0.500. Okay, then we can change the color of the psychological level to something else. Let's see, we can use let us use green, and let's make the line fat. So back to the channel again. I just skipped that drawing part, so just to show you what I've done so far. You can see this line is high of the week in the blue, low of the week in the lower blue. The rest are psychological levels. So I try to do 100 pips from each, then broke it out somehow in such a way that all these lines you're seeing ends up at zeros. These are my psychological levels for now. So the market is around this area, so I just drew psychological levels around this area and see how the market reacts to it. Now I will now step down to a 15 minutes time frame. I'll now step down to 15 minutes time frame and now begin to look for opportunities. And what you look out for is that when a trend line meets a psychological level, like now, look at this line, is the high of the week is one of the lines as well. When the high of the week and psychological levels and the trend line meets together, is a good opportunity. Sometimes at least let two lines meet together and you see a weak rejection, then that will be an opportunity for you to avail yourself of the opportunity to take the trade. Now, if you look at it so far, I've drawn a trend line, and you can see that there's a trading opportunity here. There is a trading opportunity here. But what I want to do is that I might not take this trade now because I'm still skeptical about the US dollars so far this week. There haven't been any significant strength movement, and you can see from the news, US stock fall after recent big gain. Oh yeah. So now let's go over to the US index. So the USD index is what I used to have an overall picture of the strength of the US dollars. Now let's go over to the dollar index, which is DXY. I'll come back to the USD. Okay. Now I've already drawn. What I did was I've already drawn this already yesterday as well. I haven't done much already. So what we are actually interested in is the direction of the market. Now the US dollar now is pushing to the downside. What does it mean? The US dollar pushing to the downside means that the US dollar is weak. It's not gaining strength. It's weak. It has been weak, and now so far what it has done is that yesterday it was 27th. This is when the market started. It pushed to the downside. It tried to make an attempt to push to the upside. It pushed downwards. Forget about these lines. Just look at the trend. You see it's pushing to the downside. So far, right now, you can see the US dollars is consolidating. There's no much activity happening around for the US dollar. That is consolidating, and the session we are in is the Asian session. So that's why I don't want to take any trade now. Let's go back to Euro USD. So because we have seen that the US dollar is consolidating, there's nothing happening. The best is to leave it alone till we get to let's see what we have today on the news. I'm being detailed in my videos. I'll be trying as much as possible to be detailed so I can show you exactly how I really trade. Now you go over to investing.com and you click economy. Let me show you how you do it. Maybe I was too fast there. You type investing.com, Google it, then enter the website. You click economic calendar. When you click economic calendars, then you go to filter. You filter all the currencies you want. I filter Canada, Eurozone, New Zealand, Sweden, Switzerland, CHF, Japanese. You know all those major currencies. I don't need this one. Then United Kingdom, that's GBP. Then I think which other one again? Yes. So these are the major ones. Then the Australian US dollars, the major currencies. Then you click. You come down to importance here, and you click 2 stars. This we filter the most important events that can have impact in the market. So I click this one, the 3-star, which has the highest volatility. Then the 2 stars, which has just 2 volatility, which is still okay, can still have impact in the market. Then what do I do? Then I click apply. Then when you click that, it gives you a picture of what to expect in the market. Like for today is Tuesday. Today you click today, you can see today early in the morning as at 12:30 US dollars, there was core durable goods order. And what does that mean? US dollar, this news came in support of the US dollar. How? Previously, this core durable goods order from the US dollar, or concerning US dollar, was previously 0.2%. Now the forecast for was that it increased to 0.3, but you know what happened? The forecast increased to 0.7. So what does that mean? Each time there's an increase in the value, the US dollar will gain strength. How does that impact the market? For example, let's go over to the chart again and let me show you what I mean. So how it impacts the market is that since the US dollar gains strength at that point in time, this Euro US dollar will push to the downside against the euro. So gain strength of the US dollar with regards to Euro USD means that there will be a push to the downside. That we can enter a sell. That's how you trade fundamentals. But because we're trading technicals, I'm doing more of technicals. So we see that right now the market is not. I've checked with the strength of the US dollar through the index, say that the thing is consolidating so far. The best thing is to leave it, to leave the Euro USD. So yeah, that's how it is. So for now, there's nothing happening yet. I will start trading as from the London session, which will be around I think around 7. So that's how it is so far. I'll come back to the chart and show you how I went about this. Just a wrap up of this Euro USD trade I took. Before what I did was to do a Fibonacci retracement here. Down like this, push it down like this. When I took a fib measurement from here to this point, so I'm expecting the market to react around this area, and you can see the market has gone up here and react here and came down here, and it's about reversing back now. Now this is a testing. This is not a real. This is not. I used my demo to test this because I was not too sure of the market, of what the market is going to be doing this week. But you can see that it played out very fine, and I showed you how I entered, and now I've taken it. Now we're already in. Now it's time for, we're in London session. London session starts 7 p.m. New Zealand local time, and I'll be looking for trading opportunities. I'm going to be recording it to show you live how I take my trades and how I jump out of the trades. So I'll catch you in the next one. Peace out. This is FX Mesh back again to the chart. I missed this particular trade. I marked out. I was waiting for the, I think I was waiting for the news, USD news, but I slept off. You see that I marked this point, and I expected the market to push to tank down to the downside. So this is what we experience in trading. Sometimes you lose some, sometimes you gain some, but the thing is that I did not enter a loss trade. I predicted the trade quite alright, but I didn't take it. I missed it out because I slept. So the reason why I took this trade was that, why I marked this trade and was intending to take the trade, was that if you look at this market very well, you can see that there's on a 4 hours time frame. Go to the higher time frame and have an overview of what's happening. Okay, now you can see that the market's pushing downwards. So it's let's define the direction, the flow of direction of the market. So if you have from here came down, see this area, then push to the upside, it hit this level, reacted around this level, 1 2, that's sub levels, second 1 2 3 4 5 around this region. Then it saw that it couldn't break past it, it tanked back, pushed back. When it pushed back, what I did was that I zoomed to a higher time frame. Sorry, to a lower time frame rather. To a lower time frame. Into a lower time frame. And allow the market to react. Again, the market rebounced and pushed to the upside again. Right? When the market was here, what I did was that I took a frame here. Now it's not too clear. I'm trying to explain it so I took a frame of this pullback. Let me remove this one. It's confusing. Yeah. So the market came up here, right? From all those impulses it made, went up here. I took a frame between these 2 points, and I expected the market to react in the middle area. But, like I always say, 0.61, and that's 0.61 or 0.50 or 0. I think 3 something, 3.8. Now the market came up here, it reacted here. Then I saw that because of this reaction here, I knew that this sign is a sign of reversal. and as at this point, there was a news. I think it was let me see. The news was around. It was about. It was about around this time. I think around this time. So the news came out, and this was just slightly positive because it was previous 21 point this and 21.2 for US pair as at this point in time. S&P, CAS, HPI, Composite 20. So I think around that time, then I was waiting. Then I went to my bed to sleep, just lie down, waiting for the news. When the news came out, I was already asleep, and you see that NAS is an index. When the news comes out positive, index goes down. If index goes up, if US dollar news comes up positive, the index will go down. If index go up, US dollar will go down. If US dollar go down, US index will go up. Down. This is an index, NAS 100. NAS 100 go push down because what? There was a positive news of US dollar, like I showed you just now. So that's why it came down. And I was expecting it to go to the downside because everything aligned with my analysis. So I used in summary, I used free level to measure where the market is going to go. So free level sell. So marked from here to this point. Then I expect the market to pull back. So it went up here, reacted here. I drew this line, this point at which the market reacted. You see a reaction here. I can remove this one if you like. Take this one out. And you can see the market came down here, reacted on this point, and I drew. You can see this trend line here. Once it crossed this trend line here, I set an entry here, and you can see that it put to the downside. So I'm looking forward to more trades and letting you know how the market played out. I will show you everything, my losses, my win, and all that it is to trading. Now, trading is not easy. You need to understand how the market works. You must understand the flow of the market. There are different ways to approach the market. It all depends on your personality, your way of thinking, and the strategy you apply, and your risk management. That's how you can find yourself in the right side of the market. Now, also, I also entered one of my small accounts, card CHF, card no, that's card CHF. I entered card CHF as well. On my small account, I would have showed you, but it's not on this. I think it's not on the. Okay, yes, I can show you. I can show you. Oh yes. This is a small account, $159. I'm in losses for now. Look at it, $22. I'm $22 down now. Card CHF. I'll show you why I'm down for now. Card CHF. Where's card CHF? Card CHF. Card CHF. Card CHF. Click at CHF here. Now this is the market. I'll change it to white so you can see what I mean. This is live trading. I've been on this thing for quite a while. Look at it now. Now the reason why I took a buy because you see, you follow when you're trading, you follow the market flow. Follow the market flow. Now, what is the market flow? Right now, just you can see that the market pushed to the upside, came down here, then reversed again to this same region. Now, I took advantage of this particular impulse. So I took a flip from here, right down to this level. To this level here. Okay. Now, free retracement is such that my kind of free is that I wait for the market to reverse at least 50% or 38% or 61%, either of these three. Once I start seeing reversals around these three either of these 3 points, I draw a counter trend line against that direction, and I expect the market to reverse. What do I mean? I took a free level down, sell direction, a free level from here down. Okay, now draw a counter trend line against that sell free direction. Draw a straight line here. Then once the market, of course, the market is going to go up and react here, then push to the downside. By the time it gets around this area, I should have taken my profit. If this market pushes through this green line, I will be in profit, and this thing will change in profit. So that's one of the strategy I use to trade. Yeah, and I enter on the 15 minutes time frame. So I expect the market to push. You can see that there's an impulse. There's a push. The current trend of the market is what is important in this particular trade I took, because a 15 minutes time frame. 15 minutes time frame is a small time frame. So I zoom to 15 minutes time frame and look at the direction of the trend, and you can see a push. You see it to the up, lower low, higher low, higher low, lower low, higher low, lower low, higher low, lower low. So it's going to go like that until it crosses and until it take profit. So this is FX smashing it. I'll be back again to see how this particular trade turned out. Guys, back to the chart, and this is US 30. Today's 20. Today's what's today? Today is 30th of June, and I actually marked this particular chart. I expect the market to push downwards, and take my profit there, because the reason why I took this was that the market is coming down on the 15 minutes time frame. This is a bearish push to the downside. So the market has hit this area, the high of the week and the low of the week level. So this is an important region, and the market reacted there. So what I did was take a free retracement down. Then the market is pulling back. After it pulls back to this region, between these three areas I always talk about, once it reacts around that area and I draw a line, a counter trend line against the bearish push to the downside, once this market crosses this line, I expect it to be in profit. Although I haven't taken this trade, but I'm just watching it. And that's my thoughts and explanation. Just simple free retracement for this particular bearish push to the downside on a 15 minutes time frame, because if you are on a higher time frame, that will not be the case. Really, it cannot be the case, because it's because I'm using on a lower time frame. I'll be focused on this area, a lower time frame focus on this area. So that's how it is. So now this shows you clearly what I'm doing, that I've taken a free from this point to this point, and then draw a counter trend line. Once the market retraces, it pushes down into profit. Then also let's go back to card JP. Is it JP? Okay, yes, card JPY. This card JPY, I also you see card JPY. You see what I did here. It worked very well. I didn't take this one as well. I've not really had confidence in the market overall, because I believe the market has been a little bit tricky, and there's not been enough movement, enough volatility for me to really take out trades. But I've marked out trades, and I didn't take them out. But what I do is that once I mark a trade, I'll just put testing to see if it's going to go the right direction. And you can see this one, card CHF JPY, free level to the upside, waited for a retracement, pull back, draw a counter trend line against the free, and look at this, it's a profit, it's a profit. And also it's building a channel, which I also drew as well. And you can see this area. I took a trade inside here. Let's go to 15 minutes time frame. Let's see how that plays out. And you can see in the 15 minutes time frame, wonderful trade. It's soaked in profit. Testing, this is testing. I didn't take this. I didn't use my demo. I just want to try to see what I think the market is going to do. The market was around this area when I anticipated that the market is going to make a kind of a push to the downward. You know, you can see the build up from here or downward. You can see how it's going down here, up there, down. So what it's doing is the market is creating higher lows and higher highs, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then, you know, I anticipated it's going to push to the downside after creating a double top here. You can see an M shape there. So that's what happens, yeah, in the market. And this reaction, when the market reacts, is always around when a session is changing. When is a session change from maybe from Asian to London, from London to, so that those changes, what I've observed about the session changing movement, there's always a reversal, there's always a reaction every time a session changes. So as at the point, as at the time this market has created this double top here, it was here when I was anticipating an entry, and I put the entry there. I didn't take the trade because I was going to bed to sleep and to rest. I didn't want to I didn't like the way the market was behaving overall. That's why I didn't take the trade, like I said. So this is a very good trade, although it's still in profit, which is all right. I expect it to come down a little bit and push to the upside. Now this is another key point. This is a psychological level here. It will react here, come up here and react, maybe come up here and react, then come down, then bounce up again or whatever. So that's how it is for that one. Let's just see. There's a particular trade I've been tracking. Let's see what is happening. This particular trade I've been tracking for quite a while. I entered it actually, but it's so slow and sluggish. I've not been able to. This week has just been crazy for me. It's card chef. Yes, card chef. Guys, you can see what's happening. I entered this particular trade, and honestly, I'm still running in losses, but it's not over yet. I showed us the other time that I'm still in losses. Let me see if I can. Yeah, so look at it here, $61 still. I'm trading it on a small account, 159, like I said before, and you can see that the market is still reacting around this area. I didn't put stop loss because I expect the market to push to the upside. Why did I take this trade? Why did I take a buy? I took a buy because I can see that it pushed to the upside. Okay, when the market got to this point, it pulled back significantly and pushed up again and tried to test the same level. Then it reacted. There was a kind of a consolidation here, and the news came and pushed the market downwards significantly. Let me explain. Let me expand it. Now, what is happening now is that you can see now it's clear. So this is a significant push, and this must be as a result of the news. After the news, what I did was I took a free retracement from this point, this point, down to this point. So I'm expecting the market to retrace like this after a push to the downside, push down. So by the time the market pushes up, I would have been in profit. So I entered buys here, and guys, for 2 days I'm still in a drawdown of losses, but I expect this market to push to the upside and I'll run into profit. I'm expecting at least around above $100 profit on this account. So I'll be very patient. Normally I usually do, most of the time I do day trading, but because of the circumstances surrounding why this market has been slow, I don't know, it appears that CAD has been weak against the CHF, and it's been really weak. So the CHF has been gaining more strength. That's why you can see consolidation here, and it's pushing downwards, just creating double bottom here. It hits here the first time, came down again, hit here the second time, third time. See, it's keep bouncing. Then when the card start getting strength, then it begins to push to the upside. Then I can close, and maybe I may know. It all depends on what I want. I could just wait for it to enter its profit a little bit and just close it, because this market is a little bit slow for me. Yeah, so the market overall this week so far has been it's been a little bit slow somehow and tricky. Then also I took trades on gold. I took trade on gold. Let me just minimize this. This is my new platform as well, trading platform, which is Ninja Trader, Ninja Trader. Yes, okay. back to the chart. Now I also took some wonderful trade on gold. I entered gold, and I was in profit actually, but I jumped out because although I made a few, I think I made like $50 in this trade, this particular point for gold. I expect the market to push to the upside after a significant push to the downside or impulse. This impulse, every impulse follows a consolidation. Each time there's an impulse, many times there's always, not every impulse actually, many times after an impulse there's also a consolidation. For example, now you can see an impulse up, impulse down, the consolidation. So that consolidation is like the market is reacting back, pushing to the upside, and I entered, and I didn't wait for it to get to take profit. You know, I just got around the very small pips around here, so I just jumped out. The market has been playing around here. It shows that the USD and gold has been, you know, fighting, just, you know, and just like that. So gold drops on dollar strength. So you see, gold drops on dollar strength. You can see. So I jumped out of this, but I think I got around $50 on a $1,700 account. So which is not too bad. I jumped out because I didn't like the way the market has been. Yeah, the market has been really mucky. But I will see if I can take more trades again and explain to you how I got it. So what I do is I make good setups, and I easily take trades easily. I just use my free level to enter, or I use a break and retest, or I use the multi time frame analysis. That's what I do. So I use these three strategies. So whichever way, depends on how the market behaves, I'll take it. Sometimes I run into losses, sometimes I run into many times I run into profit. So that's it. I'll be back again to the chart. Guys, this is the gold I was showing you I entered, and you can see I entered profit, and after that the market dropped deep and then pushed up, impulsed up to the upside, and you can see this is a very good signal here, but I didn't enter, and the market pushed down to the downside. Now it's hit this level, this line, and it's about to show some reversal. I can enter here now as a buy, but I'll just leave the market for now. So you can see that I made some profit here. I think I didn't go too hard here. I think I made about $50 or something like that here. So that's how you trade it. Now there's another signal here. Now you can enter buy for there's a critical level here, 1790.000. Now once psychological levels and trend line meets, psychological level rounded figures, so you can put 19700 1791741. Okay, now you can see once psychological levels meet with once psychological level meets with trend line, you can see what the market is doing, is reacting at that point, and I can take a buy because there have been a significant drop here. So you can take a buy by just taking a free level to find how much it will retrace, and you can see market is going to push upwards at least to some distance. I cannot enter a buy if I want to. I'm going very conservative this week. I don't trust the market. It's the way the market has behaved this week. I didn't really like it, so I can take it kind of. There's going to be. I'm expecting there to be a reversal from this point, maybe to a point. I'll take point to this point. I take profit each time I take a free level measurement from here or from here. Any distance from 2 points, there's always 3 points I will look out for reversals at 0.618, 0.50, 0.38. So I expect the market to drive in here and market to push up, good to push up at least to some extent, then before it reverses down again. I'll see how this market goes later, but I'm just showing you that this one entered profit. So catch you in the next video. The next video will be, I think, CAD JPY. I'll I'll show you how I went about that. 1st of July, Friday, 9:11 p.m. New Zealand time. I've just cut this entry. I entered this entry GBP USD 15 minutes time frame because this is a key level. The market has tested this level a couple of times. One, tested again, 2, 3, 4, 5, and the 5th time it had multiple rejections. So that's a sign, multiple with weak rejection as signs of reversal. So that's why I took this trade. And if you look at it from a higher time frame, 4 hours time frame, you see that the market, when you draw the trend line, you can see it's pushing to the upside. So if the market breaks this line, then it's going to continue and push down to this level. But that's a very, since it's showing multiple rejection on the 15 minutes time frame, I took a buy, and my take profit is here. I expect the market to swim in here and up here, then take my profit. But overall trend of GBP GBP is strong, but this reversal is just for, it's a short reversal. I just want to get some profit and jump out. You can see clear weak rejection, 1, 2, 3. In fact, 1, 2, 3, 4, 5, 6 rejection. A lot of bounce. It means this level is very strong. So I'll be watching to see how the market goes, and I'll see how much I'm going to make. I'm practicing proper risk management. I'm not trading too hard. I'm not going too aggressive. Just taking it easy, and my target point is here. Catch you in the next one. This is FX Mesh smashing it. I'm just wrapping up the video for the week, and GBP I entered. You can see I fell into significant losses. When I mean significant losses, my analysis was correct. I think I did everything right at this point in time, and why I took this trade was that the market major flow or trend was in the I would say in the, let me just, okay, the major flow of the market is bearish in its trend, pushing to the downside. When it got here, like I explained so far, I took a buy. I expected the market to push up a little bit. I was expecting a short buy, but what happens was that the market reacted significantly by pushing down in an impulse manner. I lost some money here, and look at what the market did. But it got to this level, the next level, and reacted there and pulled back all through the night. See, 2:45, 3 o'clock, up until 7 in the morning. I didn't when I ran to loss, I just left it. So why I felt that the market has not really been behaving the way I wanted was that it was moving more in one direction. And when the market is moving one direction, sometimes you cannot, when there are pullbacks, you want to take trades on a few pullbacks, then you continue with the trend. That's what I intend to do. But I took a buy here also because this is a strong level. You can see this is a strong level. The market reacted to 1, 2, then 3. It was reacting here. I expected, because it has been rejecting this level, it will push up a little bit before it now comes down. But what happened was that it just pushed down, and I ran into losses. Well, that's part of trading. I took this one live trading. This is not demo. This is not testing. It's my take profit here. This is my real account, but I lost some money here. But that's part of trading. In fact, this particular loss is the real learning. When you win every time, it's good. But when you lose, you learn more. So next time, it improves your trading. This is FX Mesh smashing it. If you like what I'm about, please like, subscribe, and share. Now, looking ahead in the coming week, which will be 4th of July to 8th of Friday. Let us see what the market is so far. with US dollars, US dollar pairs. Now US dollar 27th was this beginning of the preview of this week ending. So let's see 27th. 27th, we can see that the market started on a consolidation. US dollar started on a consolidation, then all of a sudden it started pushing up. It started gaining strength. You can see it pushing to the upside. So once dollar index, and dollar index is just the comparison of the US dollar to every major currencies, or the food basket of all the major currencies. That's US dollars to other currencies, like US dollars to CHF Switzerland, US dollar to Australian dollar, US dollar to New Zealand dollars, US dollar to Great Britain pounds, US dollar to Japanese yen. All together, the index of it is what DXY. So to see it, you can see the direction of the graph of DXY to measure the strength of the US dollars, and you can see that in this previous week, the US dollar gained significant push to the upside. So any US dollar pair that has US dollar as its prefix will fall down. See it, downward trend. Euro, downward trend. This one will be up, upward trend. Gold will be down, downward trend. AUD USD, downward trend, downward trend. BTC, of course, it has been downward trend, and it's even downward trend more. USD, it will be upward trend, upward trend. You see, upward trend. You understand? So that is very important to understand the strength of the US dollars, so we to understand, to make informed decision. The reason why I lost was that I wanted to take a short trade on a significant bullish trend, a short buy trade on a significant bullish trend, and that's very dangerous. So I've learned my lessons from there as well. But there's nothing wrong if you take a buy in a bearish trend. Like, look at this one now. The trend is pushing to the downside, but this is a buy inside the significant bearish trend. People made money from this one as well. So although that's dangerous, so I got the analysis wrong there, but I think my entries were, the reasons why I entered was correct. So this is FX smashing it. US dollars is still gaining strength. I expect US dollars to gain more strength next week. We might see for the GBP USD, I think the market is going to react here. Then it's going to pull back. It's going to pull back. Went up here, it will react and push back. Then before maybe going upwards. So that is that for the GBP USD. GBP USD is my major pair. I'll be trading next week. I'm going to be cleaning this particular setup and be making another fresh setup for the next week. Catch you guys. Make sure you take proper risk management. I'm going to be teaching on proper risk management in the nearest future, to see how much if for example now you have a certain amount of money, how much is the risk level, how much should you enter, how many loss size should you enter, calculations of pips and all those kind of stuff. That's what I'm going to be entering to, because those things are also very important. Managing your account is also very, very important, because the reason of trading is that you want to make profits. So while making profits, you must know how much you want to risk and how much you want to lose. So this is FX Mesh signing out. Catch you next week. Peace out.